Blockchain's been such an amazing discussion that there's actually whole industry groups talking about how or we should or shouldn't be using it. And I want to change the technology on this too. We call them gig workers. We shouldn't be calling them gig workers. We should be calling them gig entrepreneurs. And you don't think of a physiotherapist as a gig worker. We don't think of music teachers as a gig worker. They are the ones who need blockchain. There's a term in the financial industry called open banking, and open insurance is way behind politically, socially, where open finance and open banking is.
What's hitting me is point of sale, and then sort of like here's an opportunity.
So here's an example I love to hate.
Talk about Apple Care.
Apple Care, absolutely. They've got a good product, and they hit you at a time that you know you need the protection, right? You just spent $1,000+ on that phone. Apple Care just offers it to you because they know you're in the situation where you might want that.
This is Lisa Smith. She is, for quite a long time, has been the CEO of Tech-Insure. Am I right?
Correct.
Right. Well, how are you doing?
I'm doing fabulous.
Right.
Got a little bit of snow here, but the roads are clear. Traffic's good. We're all set.
Okay. All right. Well, I have a few questions for you. I guess my first question is, what exactly is InsureTech? What does that mean to you?
It's what it means to me, but it's also the group that works in this industry has worked very hard to define this industry. So InsureTechs are considered a subdivision of the Fintechs, and the Fintechs are the technology companies in the space that deal with the financial services industry. So insurance, though, wants to separate itself out. And they did a great job. There's a lot of dialogue at the time. How do we do this? How do we manage this? And essentially what they came up with is InsureTech is about protecting your financial position as opposed to FinTechs, which are about investing in your financial position. So we separated them out. We use a hashtag in INSURTECH. We drop the middle E typically. And what they are is how do we challenge and disrupt the insurance industry to do things better?
What does better mean to you?
Better means not your mom and dad's way of doing that. It used to be traditionally you'd go to mom and dad's insurance office and the insurance broker would meet you with a big smile and they would take down all your information and go and get you a quote. And then they'd come back and you'd say, great. And then you'd have to do this whole long paper application and submit it through and then wait for the paperwork to come back again. What we've done in the last 30 years, let's say excluding the last 10, but what we've done is work to digitize that. But it's the same process. What we did in the digital world was we still took that same application paper and we just put it into a big XML request. And we were some of the leaders in XML and data transformation and data movement, but everything's this huge application process and it's still got to go through all these same steps. So we do it a little faster. We took weeks down to days. In some cases, we're getting down to hours, but we're not down to minutes. And we're not down to instant responses the way other industries are. And we can do better. Even now, we've done better, but we can do better to get clients buying insurance for the right reasons at the right times with the service level that they expect. And I don't believe we're there.
So from the side of someone who maybe is consuming this, what is the experience like? You talked a little bit about how you would have to fill a bunch of forms in, and now you're just filling a bunch of forms in a different way. It's just digital paper. So how are you able to squash that process down? What are you collecting, or what do you have to not collect in order to make that a little bit easier for you?
Well, and that's a really cool question because the reason we collect all that information is so that we can refine your price. If you don't provide us certain information, then I don't know things about you, and I am going to assume then that you're a higher risk, that you're more likely to do things, that the reason you're buying insurance is because you're more likely to have an incident. So be a little bit leery of anything that just says, oh, here's insurance, and I don't need to ask you a lot of questions, because you're paying a premium for that. You're paying a higher premium for that. What we can do better is if you share with us some of your other digital information. If you connect with me on social media and you can share with me your sex, your gender, your age, your address and location things, then I don't need to ask that. And I can get that from you, and I can start to build that digital request that I need in the back end without you having to form fill everything. There's some really cool things out there that you can let us know with the use of your technology, with the use of your profile, that then lets us do some really cool stuff in the background.
So this sounds technically quite challenging. Like everything that comes
Yeah.
easy for the consumer, there's quite a lot of challenges for the CEO and her team. So how's that process been for you?
I have an amazing team behind me, building an insurtech at a time when investments are down in insurtech spending, when there's a looming recession. I mean, people still need to buy insurance, and they will.
Probably more so now, right?
Well, exactly, because they're more at risk.
Yeah.
They've got less budget to work with, right? If a financial disaster hit you, you need the protection more than ever. Exactly. So, how do we instead start to switch that conversation to moving away from having to do those big forms to getting these connections so that I can make this seamless? And it's one of the big things is hitting you at the right time at the right place to get that product to you when you need it. So I need to get better at that, and social media and the social data and the information that's out there is one of the biggest tools we can use. The other big tool and the industry friction, that what causes me the stress, is the platform to platform connectivity systems. These carriers are still either on archaic mainframes and they're trying to put really spaghetti code in front of them, or they're on a little more updated system, but I like to call them modern legacy. They were designed to be more efficient for them so they can move data between their components better, but they're not better at making those components exposed to me so that I can build that better digital journey. That's probably the biggest challenge that we've been facing and dealing with is how do we get the information. You can share it, in the social media part is better, but now I got to really work on this. The industry's tried all kinds of joint solutions, but who pays for them and how does it fund gets really complex. So we're honestly in a better state if everybody just kind of built some microservices and started exposing them to us and actually got to. There's a term in the financial industry called open banking. And these are the services that let you, when you go into your bank account app or these other new apps that you're seeing on the fintech side, how's your spending? How's your budget? I can see you went to Starbucks. I can see you did these things. If you did this, you could save more money. I don't have open insurance. So I don't have access to that data. As an outsider, they keep me out. So I either need them to give me the microservices to share it, or we need open banking, open insurance. And open insurance is way behind politically, socially, where open finance and open banking is. So yeah, you're right. It's a lot of challenge.
No, for sure. I mean, I really like this idea you brought up of open insurance. Like, I think that's something that it already hooks because we've heard open banking and we've heard that push. And it's almost now, once you said it, it's like, why isn't that there already? It just makes the most sense, right? Like, we already
It
have.
it does, and I'll tell you why it's not there right now. Everybody believes that their value is in their data, and they're right. But I believe, and I think more people will end up where I am, that the value isn't in owning the data. The value is what you can do with the data. And what those actuaries can do is the real gold of those companies. It's not their tech investment, it's not their process and solution. It's how do they price the product. I can help them with everything else. I can get that product to market for them. I can start to hit the right clients and manage the social data for them. I can design the journeys for them if they can give me the product and the pricing. By holding that back, they're keeping all the responsibility for that journey, for that buy, for that sell on themselves, as opposed to letting us in. But as long as they feel that the value is in that data ownership, they're never going to go. Like I said, the other social media services and stuff that are opening up the data for me let me do some really cool things. Finding you in the right place, knowing that you just bought a phone and might need insurance for it or might need a warranty for it. All those other things we can do. So it's really exciting. I think that if we can just get some people in there on the insurance industry to listen and to contribute, that we're going to end up in some really cool spots, but we're not there yet.
One thing I was thinking is, how it seems there's a lot of technical challenges for sure, right? And it seems like you got a good handle on what it really means to move that forward, what you need to connect, and what you need to put together. But how difficult is it to have these conversations, and how do you sort of navigate that? Because there's a lot of incentive management there, but just in general, how do you bring this forward to? And I think it's kind of almost clear that people would want this, right? I mean, they want it everywhere else. Why wouldn't they want this here?
The reason I think they wouldn't want it here right now is, and it's changing. It is, but it's moving at the speed of an iceberg. It's very, very slow. They want this because they want the sales and they want to provide value, and we can do that and we can grow. But right now, the growth is more in aggregating and consolidating the brokerages and the independent advisors in the US, so that the brokers are building a bigger portfolio to work on, and they're not working on new business or organic growth. So now the insurers are trying to do that directly, and but they're so conservative in their pricing and their approach that we're hitting roadblocks. The answer, starting for me at least, is there's some breakaway components. There's some components deciding that those big insurance companies are too monolithic because of their systems, their processes, and everything. How do I break away and disrupt? Pieces like me. I can do this piece for you. Let me do it. The other piece that's breaking away, though, are what we call MGAs. They're wholesalers. And they actually are getting so that they can design their own products. And when they do that and they can get funding and investors for their product, they become more like a hedge fund or a mutual fund operator. They design an insurance product that they're taking a risk on, that they think they can provide protection for everybody and still make money. And they do it in these little more micro components. And when they do, they need help getting it then on these platforms and these systems. So this whole concept of multi-tenant and the concept of integration is happening, but it's happening at that level more often than it's happening with the big carriers, and more often than it's happening with the really small carriers who have no budget. By breaking off the components, we can solve the problem one piece at a time.
Right. So, are there pieces that have a tendency to accelerate more than others in the market, where maybe this is something people are willing to digest a little bit faster, right? Like something like
Yeah,
tenant insurance, you know.
people are still really resistant because the insurance industry and all of this too has done a very lousy job at creating that good sales experience, that good buy experience. Tenant insurance is one that a lot more landlords and a lot more condominium unit owners and stuff are being required to buy. So, very much like auto insurance, your state or your province is requiring you to buy it. So, you're buying it at a necessity, and you don't understand the value of what you've bought until you needed it.
Is that true in the U.S. as well?
Yes, it's true
Oh,
pretty
okay,
much everywhere,
fair enough.
in any market. So, when you're forced to buy something, you're resentful of it. I get that. But when you see the benefit and you know what it's doing for you, it becomes really, really exciting. And if you don't mind, I'll share a very personal story with me, which is why I stuck in the insurance industry. I was working on the life insurance side, and it's very hard to build a book and a portfolio. So they gave us some accounts to go back and contact and see if we could upsell, they call it. Sell them a little more coverage, see how they're doing, see if there's other products that they need. Some of these accounts have been pretty old and pretty neglected. And I was doing my phone calls, and I called a household and found out that the policy owner had actually deceased several decades ago, honestly. And she didn't know that he had this policy out there. So we expedited the claim. We got it pushed through. This poor widow's been without this money and without her spouse. This money should have been there to make her life easier at the time. It's what he bought it for her, and she just never knew. Um, we got the check and we went out to personally deliver it to her. It was a bit of a life changing experience for me. It was only $5,000. You know, Back then it was a little bit more because we're talking quite a few years ago for myself, but it's if $5,000 even then was not life changing, typically speaking, right? You're not going to all of a sudden be able to get a better condo or get a newer car or anything like that. And this poor lady was so excited because it was her turn to host the card party that week with their little seniors group. And she really wanted to buy cream instead of milk, and that just wasn't in her budget. And here I am handing her a $5,000 check. In her world, that was life changing. That's what this is supposed to do, is provide her what her husband intended to do, was make her transition a little smoother, to make her life that little bit better, that little bit more comfortable. The fact that she got the check late was better late than never. But that's what insurance does. It protects your financial position. Without him, she couldn't afford cream in her retirement. With that little extra that he provided her, she could. It's when you're in a car accident and it's the medical bills. You know, uh, in all the provinces, if you're in a car accident, your medical bills are not covered by your provincial plan. And in most states, they're not either. They're covered by the auto plans. And those auto plans then take over everything. And a lot of people don't understand that. And they don't understand that there's actually income replacement if you're off work, that there's childcare coverage if you can't take care of your kids. It's covered under that auto plan that you resent paying. Um, and I get you, high premiums. I resent it too some days. That money that's coming out of your bank account, and you don't see anything for it right away. But when that emergency happens, you'll know.
I have a bit of a I want to say question about you. How long have you been in this industry? Like, what made you get in?
So we're going to round down on that question to about 30 years. I'm not going to confess to anything over that. Um,
Fair enough.
but I ended up in it in a very strange way. Um, um, my mom was an insurance agent, but I didn't inherit her business or anything like that. What ended up happening was it was a little local regional office, just like I was describing, and he wanted to do his auto and property sales in the daytime, but he did what was called a family insurance checkup with his clients, and he'd invite them in to avoid those problems like I saw before, where the clients weren't reached out to and never knew. So he did these meetings every Tuesday and Thursday night, and I would go into his office every Tuesday and Thursday night. And the office had a window into my reception area from where he was with the clients. If they brought children with them, I became a nanny for a couple hours. And I had coloring books and games, and I entertained and babysat the kids where the parents could see through this window and keep an eye on me, but they weren't distracted and they could have that financial planning conversation with their agent. If they didn't bring children, then I was a data entry clerk, and I converted his office, and he was one of the first paper-free agencies in Canada at the time. So, I got to see the benefits. I got to see what that office was about. I got to see an agent who really cared about his people and why he was selling them certain coverages and protections and finding out why they needed it. I was sitting there with the kids. He was talking about their family to them when all this was happening. So I was kind of done. That was it. I moved into insurance. I'm one of the few people who went to university saying I'm going to be an insurance person. But it's been an adventure. I started out as an agent. It wasn't by then what I wanted. They were changing the contract terms. They want to pay less commissions. They wanted to structure it differently. So I moved on to underwriting. I'm the one approving the applications and everything. I'm looking at all the data and seeing how the pricing is applied. I'm learning how that works. Then I started to move into the technology side, and I did the agent technology side, and then I did the carrier technology side. And I was somebody who could speak both sides of the equation. I understood both points of view.
What does that mean, carrier and agent technology side?
So sorry, you're correct. The agent is the person who's selling you the insurance. They are the ones who have to
Mm.
capture all that data and create that request, digital, paper, whatever. They have to do that. The carrier is the person or the entity that actually underwrites the product. That actually is the one that agrees to take your premiums and pay the claims. And they pay agents commissions or some kind of compensation for selling for them as a distribution model. Um, but that's the disjoint that happens. That's what's causing all that friction we talked about earlier and where I need those APIs. It's how do I get the data from you through that sales process, supervised by an agent who can make sure you're buying the right products at the right time, and get that through to the underwriter who can confirm the pricing, who can validate it, hopefully digitally, um, very quickly, and return that back to you so that you're covered. It's
So,
not easy.
at some no, it's not. At some point, you decided to start insure tech. So you've gone through your journey. I think you probably have done quite a few roles. Maybe, in fact, all the possible roles you can within that industry. and then you said, you know what, I want to just take over now. So when you make that decision, how and why did you take over this like really hard thing to do?
So I'd started.
Why?
No, it's a really cool question. It's a really cool question.
Right.
I had a lot of mentors kind of in the industry, and mentors should grow and change with you over the years because as your career changes, you're going to have different needs. And I had a couple that were kind of sitting back watching me, and they're like, "Well, Lise, you've got all this information in you. You've experienced all these things. You've seen us all in action now. With your consulting career, you've been in and out of so many agencies and so many different carriers. What are you going to do about it?" And it takes a lot of guts to start your own company. Like you have to have home support, you have to have business support, you have to have those mentors who are going to be there on the bad days. You have to have coworkers um, who believe in your vision and your plan and you, because there is no roadmap. I can't hand you a job description because I'm still building that. We're building that. It's a very odd world. So it took me a lot of time to kind of get my nerve up. A female in technology in an industry that's moving at the speed of icebergs. How do you not only break the glass ceiling, but how do you break that glass technology firewall? How do you start to get people to listen to you? And I usually joke that they weren't listening because I'm only 5'2". Um, how do you get your voice up there? How do you get your voice out there? And I've been really lucky and blessed to have these mentors. So we started consulting as an independent probably about 6 years ago. We actually then really chose the piece of the we want to disrupt about exactly a year ago. This is pretty much our anniversary month coming into early February. Um, Thank you. We started building the plan the previous fall. We thought we had a vendor who was going to help us. The contracting on that fell through. We couldn't agree on things. So how do you turn around and decide we'll just build it ourselves? And it was a very gutsy move, but it was a very exciting move. And we started about a year ago. We're going live now. We're just hooking up the production environments and pushing that technology out with our first client. Um, the biggest challenge in all of this is understanding the shift of the market and where did I want to disrupt. So I chose the sales distribution. I really believe the products are good, and they'll continue to evolve and they'll be better. And the carriers have a handle on how do they get better at that. And yes, they need to share the data a little bit probably, but we'll get there. The piece is that we have so many agents and sales brokers retiring, and nobody wants to grow up and be a sales agent still. We haven't done better at making that career better. So we chose that digital disruption in the sales process. We're choosing to make that much more fluid, much more frictionless, so that you can get through that process and you can get the right products and coverage when you need them. Because the thing that freaks me out, there was another mass shooting in the US today and last night. And here's a whole bunch of people now that are going to have medical claims and medical injuries. And honestly, in the US, they don't have the coverage. Here in Canada, our government provides a lot of our healthcare coverage, but we're still there with floods. We're still there with the fires. We're still there with all these other claims. Even if you just had a damage inside your house and you're hit with a couple $1,000s, some people don't have a couple $1,000s spare right now because of the economy. Um, so how do I get that protection to you? And it's been a challenge, as we discussed. There's been a lot of ups and downs, but it's the people cheering you on, and it's that 30 plus years of background to know that this is the area that I can make better. This is the area that I feel the most passion about. This is the area that my eyes light up and get excited talking about. So hopefully we make a go of it.
So I want to talk a little bit more about the technology and how that actually integrates into this older systems and newer systems. So you've definitely given a good summary of sort of the idea behind it, which is you're taking customer information that they have already given and provided to in public platforms, leveraging that to make a pseudo, probably even more accurate assessment of who they are, because
Yep.
you're able to make comparisons of different places, make an approximation, and really, give them some value based on that. Even maybe see how their identity for themselves has changed, right? Because of you
Yeah.
being able to compare in different places. And there's
Yeah.
a lot of opportunity there. I mean, I think we can go deep in terms of like how you can really get to understand a person, provide them maximum value, right? In terms of giving them exactly the kind of coverage they even don't even know that they need. So you've talked a little bit about that. Um, But then there's the side of, uh, you have these salespeople who are taking that information and then helping people make decisions based on that. And then you're also talking about the brokers and connecting, some of their products through, right? So how does that, so you have all these sort of pieces and you're trying to fit this puzzle together. You go to a broker and you tell them, hey, look, we have these things and we want to work with you. So how do you, what is the process behind that? Do you talk to the engineering? Do you talk to the head? Do you talk to, like, how do you actually, make this possible? We can make this possible. Who do we talk to make this possible for you on the condition that you understand how valuable it is?
Absolutely. And you're a little bit right, and a little bit the way the technology works, it changes that conversation a little bit. So the part that you're right about is how do I go to those agents, those wholesalers, and say, hey, you got a cool little product. Let me help. And that does become a bit of the conversation then with them is, can we help you grow and expand that product? And as soon as the answer is yes, then we move very quickly away from the conversation is no longer with them. We want to know about their sales journey. We want to get their data and their experience, but that's the stuff that makes it nice and it's important to do. But I can't do those things if I don't move to the next piece, which is platform to platform. And a lot of that right now is, as I mentioned earlier, that trust conversation that they can't do it all. Why should they let me in? And it's understanding that the world has evolved to this platform to platform system. You're going to take your sales platform and put it on Salesforce. You're going to take your digital store platform and put it on Amazon's platform and create these connectivity pieces. That's the challenge I'm trying to solve for the insurance industry. They've got a system. How do I convince them that my system should be in front? So, for your listeners who are really techie, the business architecture model is separating the user experience in the GUI from the back office processes. It's about letting their back office processes be back office processes and quit trying to be everything to everybody because that doesn't work. So, how do they keep their back office processes and make sure that their back office processes are running efficiently and that they're investing the time and the energy that they need in that stuff, the issuing of the policies, the paying of the claims, and those things that actually make the insurance industry go versus spending their time on the front end data collection, spending their front end time on data analysis. If you let me do that piece for you, then I can hand you back the data. You still own it. It's going to end up in your record because you have to handle the premiums and the audits and the government controls that are on that money, the investment and reporting that's all on that money. So you do that stuff. But let me gather, let me analyze, let me synthesize it for you, and then let me just pass it off to you as already done. So it becomes really a lot of the sales pitch very quickly moves into the platform to platform discussion and how do we connect and how do we do that. Then it moves into the last part, which is, okay, but now what are those other pieces of data that you need me to synthesize? What are the pieces that I already have and that I'm missing? And how do we close those gaps? And that's it. Those are not easy conversations to have with people, especially when they're on systems that don't have APIs.
But yeah, no, I'm very interested in sort of, first of all, there's a lot of complexity there, right? There's a lot they don't have that a lot of people can sit on top of and feel comfortable about, but you just don't have that luxury, right? There's actually two questions. First is that reality and how to deal with that, and then how does that end up? How are you able to still, because a lot of people, what they end up doing is they have all these systems that they can sit on top of, and then when they have a conversation with someone, they end up being able to say, look, we have this down pat in this way, or we have several variations of this and you are one of them. So therefore it's worth it. And we can do it in a certain time. But because of the complexity of the people you're working with, from the fact that they're a little bit older in terms of their systems and things of that nature, are you able to have that? Do you have that luxury where you can just say, okay, this is very much like this, or do you have to like, okay, we have to figure out a new way for these guys? And this is even separate from the fact that they might have said they have all this, they don't have it, and then or they said they have it, and it doesn't work well, right? So there's all these problems that they're bringing to you, and you're expected to solve it in the exact same time frame.
This is such an amazing conversation. You're somehow naturally we're getting from piece to piece. This is really exciting. You're right. And if they don't have those pieces and I don't do those APIs, as a salesperson for myself, for selling my services in my industry, I did not want to lose product and journeys and clients for that reason. Um, so I talked to my team and we said, wow, we can build that. But like any project, you really got to manage scope. And when you're a startup and people are investing their time and their effort into you, and we're completely self-funded. We're completely just a group of people who really believe in what my vision is. And me, honestly, these are people who believe in me. It's been so flattering to have them agree to help me and build this and go with my vision. So to manage the scope, we've said we can build this. And this is a really cool piece of advice for any other startup, InsureTech, Fintech, or otherwise, is you really got to manage scope. We've all been in projects where it's blown up because of scope creep. You know, we've blown it up because of processes with change requests and things every time you try to manage it. We sat down with a business architecture very early in our process. That was my background, was the business architecture. How do we list out all the components that we want, and then how do we pick the ones where we can get help? And we actually went out to a bunch of the MGA systems out there and said, what happens if we buy some of your pieces and we build our technology on front of it? And a couple of them weren't interested. A couple of them said, cool, but you can't get those APIs that you need even from us until 2024. One of them even told me 2026. They said it's a minimum 3 years before we can get to you. That's not the rate of speed of technology and change. That's policyholders like you who need the coverage, or me who need that coverage now, can't wait 3 years for an API.
You're working with your partners and you're talking about the APIs. And if they don't have APIs, if they have APIs, they don't work. If they don't have APIs and it doesn't work. So how do you deal with all these different levels and still provide value within a certain time frame? Do you have a system? Or you could also have so much experience and such a good team that you're able to sort of break through all those bottlenecks and still able
Yeah,
to provide value. But there's all different ways of hitting it. Either none of those ways are easy, but it does have to happen. So how do you meet all those
absolutely.
challenges?
I try to do all of those things. I'm really lucky. My partner in crime on the technology side is as he put it, grumpy old back end developer. Because they're the ones who know how to work with those legacy interfaces. They're the ones who knows how to do it. And he's got a couple of compatriots that we contract out to when we need the help. They all jump in and are very eager. Those are resources that are really valuable to have. There's a shortage of them in the industry. So when I need to connect and that other partner doesn't have the technology, we jump or doesn't have the capability, we can jump in and help. You're right too. What if they just don't have the technology? And we talk a lot about project scope and managing that. Our team did a great job in managing our business architecture. We listed out all the capabilities. We chose which ones we're going to develop, and we outsourced all the ones that we didn't want to develop. So what I have is a partnership with a company that underlying manages the back office, and they handle all my data capture for me and how I bill the clients. But they have the extended capability of allowing us to, if you have one of those insurance products and you don't have it digitized, it's still in an Excel spreadsheet. And nobody laugh at that. That is very, very true right now. A lot of your insurance premiums are actually still calculated in Excel worksheets. We then have a platform that we didn't have to build that has that capability. So we will not lose a client or a product because they don't have a digital product. We can help. And we don't have to build it, which was a really good use of our resources and a better leverage that partnership. And then those back office processes, if they can't issue that policy digitally, if they can't manage and track it because it's one of those breakaway wholesalers or something, um, we can jump in and help. If it's a broker who has the idea, as long as he can get the underwriter to back him on paper, and by on paper the financial background, like Unlike Bitcoin and all the scandal with the NFTs and those crashes where there's nothing behind it, insurance always has something behind it. And it's a piece of paper and it's an agreement to pay everywhere. So we can manage all the flow as long as they can get that piece of paper.
So is that piece of paper, that's when you say something behind it, that piece of paper, and then who's backing, or what is the mechanism or the organization or the laws backing that piece of paper? Is that coming from the government? Is that coming from a large organization that's committed to sort of paying that out? So how does that
Yes.
work?
All
You
of
know,
those things. So we have what we call domestic suppliers, and those are suppliers that are licensed regionally in your zone. So in Canada, they have to license in each province. In the US, they have to license in each state. To offer insurance, they have to guarantee your premiums that are refundable if they go bankrupt. So you at least get your money back and you're no worse off. They have to guarantee that they're liquid enough to make payments. They want to reinvest the money and do things with it to help, you know, pay those claims. While they've got your money, they invest it and try to make more money to keep the premiums down. But they still have to meet that obligation. They have to meet that liability of paying the claims. That's all regulated when they operate that way. You can also choose to go into the unregulated market. It's a little harder in Canada. There's a couple different ways of doing it in the US and some of the other markets. Um, but fundamentally, it's backed again then by a reinsurer or a syndicate or somebody who has a pool of money that agrees that they will guarantee those claims and guarantee those premium liabilities if somebody buys that product for the premiums. Then they get the money in the short term to invest it to do other things to grow their pool of money, but fundamentally they're obligated to meet those liabilities. And this is really cool. This is when you buy that insurance policy to know that they have to meet that. So when I'm an insurtech, if you don't mind, this is a really cool little bit. When I'm an insurtech, I can spend all my money and effort and blood, sweat, and tears reinvesting it back into my business. An insurance company cannot. They're regulated. That financial paper, some of that money is committed to paying claims. They're committed to paying certain bills. So they may only be able to invest 20 or 30% of every dollar that you pay them. Every dollar that you pay them in premiums, certain amount of it has to be set aside and they can only invest the difference. So when you're talking about fintechs and insurtechs, the insurance companies can't spend all their money on technology to upgrade and update and go crazy because they have those obligations. They're at a different ROI. So this is also a big challenge for us in the funding because historically what's happened with insurtechs is the insurance companies buy them and say, wait, we've got a cool technology. We'll buy you. We'll integrate what you've done into our system. And a lot of insurtechs thought that was an exciting way to go, and that's what they did, sold out to those companies. But honestly, with the way the investment structure is, that's not there. So then we went to VCs, the venture capital companies, and equity investors, and you invest in us, and we'll do this. And they scaled up and they grew up, and there's some really great examples. But like Twitter, they're at a point where their clients can't afford to buy them anymore. They grew up too much. Um, they're no longer like a startup. So how does anybody deal with them? Um, but where else do they grow? What else do they do? And the really cool answer that's coming out, it came out a couple of years ago when people started to see the trend, and it's the technology companies buying the insurance companies. So now, as a technology company, I can grow and visit, and I'm guaranteed a customer who I will sell my product to at cost, but they'll pilot it, they'll put it in production, they'll test it. Because I've been built from day one to keep my technology separate, I can now resell that technology to other carriers and invite them in our platform or invite them to integrate with us and invite them to take part in the solution that we found versus the insurance company buying the technology and integrating it, or the insurance company trying to be the startup and the incubator, but then how do they separate it? And there's a lot of technology out there right now that fits in those categories. There's carriers that have launched products that have done better in digital sales and digital solutions, like Sonnet Insurance is a breakaway of economical insurance, but how do you keep the technology separate from the underwriting when underwriting has these commitments and these promises that it's made to its policyholders? Um, it's really cool understanding where the money's going to come from and who I, as my exit strategy for my insure tech, my business, who am I going to sell to? And in my case, the answer is probably not an insurance company. The answer is probably another technology company because I built a piece that they need. As long as we all stay separate from the insurance companies, then we can provide the value back. And the phrase that I've been picking up on lately, and it's not just for me, it's for everybody, is moving beyond software as a service, moving beyond SaaS to transactions as a service. Let me do that sales transaction for you. Then I'll hand you the data. You do what you do with it, and we keep moving on. Um, and that's the really cool thing. I think I've solved, and hopefully other insure techs can follow and do the same thing. But I think I've solved the pricing model such that I don't need to talk enterprise sales anymore. Give me some microservices and I can do some things. Give me some more microservices and we can do more things. And we'll build it out gradually and we'll grow and offer more things. You'll start to get your ROI with us, depending on the product, we're predicting 7 months. You can start to get an ROI on a journey in 7 months. No waiting for big paybacks, no big tech investments, because those shareholders don't have patience for anymore. Investors don't have patience for those anymore. They don't want to hear long digital transformation stories anymore. They want payback. They want investment and they want growth and they need it now. It's a very different market that I'm coming into than if I was an insure tech 10 years ago.
Yeah, the industry doesn't have the patience anymore because of the sort of economic environment. People are looking for net profit as quickly as
Yeah,
possible.
they were looking for unicorns. They were looking for unicorns, and that's the word. And then in their look for unicorns, they forgot what a unicorn is. It's a very rare mythical beast. Is it really out there? We better would have called it, "Are you looking for four-leaf clovers?" Yes, they're out there, but look at all that you have to go through to find one.
Right. And there really isn't market share like that. Like the market is getting smaller and smaller for that sort of behavior in general, because the gap between, the gap that you would need to fill through your product or service is getting smaller and smaller because people are eating up more and more of that pie. I really like this transactions as a service solution you're coming into, just sort of breaking it down a little bit more and then providing for those companies, a different kind of opportunity where they can feel like they can invest, but the our sort of the measure of the way you've measured it is such that there's not really a guess. It's just like I can already see how you just take that. You say, "Here's your little piece," and over time, this is what's going to happen, and that you can
That's it.
measure very quickly and plan it out.
You made a
And then,
comment earlier that was bang on, and to expand it a bit, you were like, "I potentially even know more about people because I'm out of their data loop and I have access to different things." We are partnering with a company and we're able to find out what your risk appetite is. And what I mean by that is, let's say something happened to your house in a storm. Simple tree branch came down, not big damage, just a little bit. But define a little bit because to you or to me, it might be something different than to somebody else. Um, you know, when we were selling auto insurance, there's a really weird coverage that covers your replacement car. It's the one that puts you in a rental car or gives you money to take the bus or the transit if something happens to your car. And there's collision coverage. And I heard a sales rep once say, "Well, do you need your car? Can you get to work tomorrow without it?" And if the answer was yes, then you didn't need that coverage. Your risk appetite was, I don't need that protected because I can have another solution. I have something else I can do. My spouse can drop me off. I can take my kid's car. I can take mom's car. Whatever your answer is, you had a different solution. So you didn't need that risk of losing your car for a short term. You didn't need that protection. So why am I selling it to you? It's the deductible and that damage of the house. How much damage before you need help? You know, if it just knocked the eavesdrop off and you can get up on a ladder and reattach it yourself, then you don't need my insurance help for that claim. If you can afford the $1,000 to have a roofer come and replace the few shingles and fix that patch, do you need my help? And some people, the answer is yes, and you buy a 500 deductible. Some people, the answer is no, I can go as high as 5,000 before I would put in a claim. Great. Then let me sell you a policy that doesn't kick into that. Let me give you the coverage that doesn't kick into that, because then you save premium. You're not buying protection that you don't need, but I'm covering the part that you do need. When I hit that level for you, then I can protect it. And I have access to this data from this risk management company that can survey and figure this out for you with some really cool solutions. I have access to know that, you just started shopping for diapers, or you just started shopping for a new sports car because your kid moved out. Like, there's things through open banking and these data sources now that we can use that the insurers aren't, because they only care about the risk once we get it to them. It's, how do I know you're going to have that risk? How do I know you're going to have that exposure? And that's where we start to, we can, by separating those journeys, I can do something different that they can't. That's what makes my service, hopefully, valuable to them. Yes, they could build their own journeys. Yes, they could do a lot of what I'm doing with the technology, because if they have the APIs, it means that they have the data. But it's the fun that I can have along the way, because I'm not hindered the same way as them. And yeah, I know I need a new hobby if that's my definition of fun, but it is, it's kind of helping people. I don't go out and play soccer, unfortunately, on Sundays or anything like that. I sit here and try and figure out this puzzle. I try to make this better. I try to make people understand that insurance is really what keeps our economy moving. Nobody would do anything if, in our litigious society, if we didn't have insurance. Nobody would be a dentist, because what happens if you spend 7 years getting your medical dentist license, and you spend, $100,000 setting up your office or your practice or joining a practice, and you drill into that first patient and it doesn't go well and they sue you. All of a sudden now everything you've invested in your career, your life, your plans is gone. And insurance is what protects you. Insurance is what protects you as a patient, to make sure that if they do injure you or they do make a mistake, that you're not financially hindered getting that repaired, getting that fixed, getting recovery, to the best that we can. Nike's not going to ship shoes across the ocean in these containers that all go in underwater if they don't have insurance. No company is going to put all your stock into a container that could end up at the bottom of the ocean and you never get the revenue and the sales from it. All of that is insurance. All of that is what protects businesses and lets businesses and people and professionals do their thing without fearing that if you make a mistake, that other person's going to suffer. And it's what lets you as a person buy those services, um, and know that if you suffer because of it, you can recover. It's such an amazing thing, and people don't think about it. They're still resentful of it, and it's like, oh darn it, guys, you're missing the point. Sorry, I get a little
Well,
excited about
like,
it.
well, subscriptions of any kind make people a little bit wary if they're not getting it immediately. But that's sort of what it means to insure against risk, or make sure risks don't end up putting you in a tough position. And
That's it.
as much as people feel like they don't want to do it, they understand if they didn't have it, I think they would